Joseph here. Something came up today when I was having a conversation, and it definitely feels like some fodder for a talk. Now, this is both Turo and just in small business life. The need for record keeping and correctly done record keeping is so powerful, and it's rarely done, if done at all, in small local businesses, and even some pretty decent businesses at, the 1 million, 2 million gross or even EBITDA mark. I just don't see correct records. Now, why does it matter? So today I was having a conversation on the phone with another Turo host, and we were talking about thinking about fixed cost fees and what that would do to his business. Meaning maybe housing his cars at a consolidator that has lower costs on things. And I said, well, what's your present cost? What's your present cost of all the, not the depreciation, maintenance, all the intangibles? And he didn't know. And quite frankly, I was at the Turo conference a few months ago, and I was asking some of these questions and hoping to get like on the nose answers, because I know that my cost is 45.5%, or was last year, and that's just soft cost. That's not depreciation or maintenance costs. We got to 110 or 120% of incoming cost. But the only reason I could tell you that is because I'm running separate books on a platform called Wave that's completely separate from Turo. Turo doesn't give you those metrics because Turo's like, the feel-good economy. They just want you to see money coming into your pocket. You see a cute number on Turo. I forget what my Turo-only earnings number, 50, 60 grand. And you say, wow, I didn't do much. I made 50, 60 grand. What you're not seeing is, well, the depreciation, and you're not seeing the cost. So really the point of this video is get yourself a real double-entry accounting system, and you don't have to spend. Wave is free. Wave is almost, it's not really double entry, but it's pretty close. You can get the reports you need. You can get a P&L. You can put, profit and loss, which is, what's coming in, what's going out. You can put assets on your books, your cars, and you can show their worth. You can depreciate them. And you can get a financial picture, and you can do that for a couple hours a week. All you really have to do is categorize transactions. Everything that's coming in needs to be in a meaningful category. I keep them by car because I want to be able to see how many extra parts I bought for my S580 in terms of, just making it look good. I want to know that I spent $5,900 making my S580 look good this year, and that represents 6% spending on my top line, and maybe it's a little gratuitous, but I can't figure that out if I don't aggregate. So you get a double entry accounting system. You spend on one credit card or a series of credit cards. You plug them all in, and as every transaction comes in, every expenditure, you categorize it in as detailed a manner as you can, and you're setting up categories. So I recommend for each car, I have parts, I have labor. Depreciation goes somewhere else. So it's basically the expenditures are parts and labor. And then accidents also, that the gains or losses from accidents go somewhere else. But do yourself a favor, on anything that's out of warranty, at least track your expenditure on parts and labor. And you'll be surprised. Even a report of parts is great because you can tell exactly what services you've done on the vehicle if you're detailed. And I recommend writing just a single word, auto part, muffler, that way you know. And the associated labor. The labor I usually like to do hours so I can keep my mechanics honest. I'm spending, 2 hours on a brake job. Has that been consistent with my mechanic? You can check that out. So that's the first thing. The second thing is you have to reconcile. You have to check that your credit card statements are matching the records that you have in your accounting software, because people miss things and they can actually add up to really material accounting errors. But the reward that you'll get are these wonderfully detailed financial statements where you can then go and you can take your toll spending and you can match it up to your toll reimbursements, and you can say, all right, we're leaking cash here. We're not getting reimbursed for all of our tolls. Or you can look at parking tickets, and you can see the percentage of your parking tickets that have been successfully reimbursed and what you're losing on that. In other words, this method keeps you in the driver's seat and allows you to see transparently how your business is performing in different ways, and how each operation, collecting, dealing with traffic tickets is an operation, dealing with tolls is another operation, cleaning is a separate operation. You can see how each operation impacts your bottom line, and when we're optimizing, and 1 or 2 points makes a huge difference, and in the PE world, 1 or 2 points can make a huge difference with a business. Think about rolling up 10 of these Turo businesses. You want your record keeping to be spot on. That's another thing. If you ever think about getting bought out, if you have 5 or 10 cars and you want to sell to somebody and you want to promise them a return, this stuff has got to be airtight. So that's my little accounting rant of the day. I hope you'll get into QuickBooks or something like Wave and just start tracking your expenses. That's the simple advice. That way, you'll be able to get some insights on how you're spending and how you can improve your profitability. This is Joseph, over and out.